Welcome to Economic Insights. Today, we're looking at the challenging global economic landscape of mid-2025, a period marked by heightened volatility and uncertainty. A significant driver of this turbulence is the shift in trade policies, particularly the implementation of new tariffs, which are reshaping economic forecasts worldwide. Let's start with the big picture. Global growth is slowing. The International Monetary Fund, or IMF, now projects global growth at just 2.8% for 2025. This is a considerable downgrade, largely attributed to these tariff announcements and the policy unpredictability that follows. Without these recent tariffs, global growth might have been closer to 3.2%. Other institutions paint a similar picture. UNCTAD estimates global gross product will expand by only 2.3% in 2025, which is below the 2.5% threshold often seen as a marker for a global recessionary phase. S&P Global has also cut its 2025 global real GDP growth projection to 2.5%, potentially the weakest performance since 2009, excluding the COVID-19 shock. The World Trade Organization adds a sobering note, warning that global merchandise trade could even decline by 0.2% in 2025 if trade tensions escalate. Naturally, these tariffs are expected to fuel inflationary pressures. While the IMF notes that the overall disinflation trend should continue, it has revised global inflation upward by about 0.1 percentage point. In the United States, J.P. Morgan forecasts PCE price inflation for 2025 to climb to 2.7%, with core PCE inflation at 3.1%, citing tariffs as a key factor. Vanguard foresees U.S. core inflation ending 2025 near 4%. Research also indicates that proposed U.S. tariffs could lead to a 60 to 80 basis point increase in cost structures globally, costs that are likely to be passed on to consumers. Looking at regional performance, the United States is facing a significant slowdown. The IMF revised U.S. growth down to 1.8% from an earlier 2.7%. Some forecasts, like Vanguard's, predict U.S. GDP growth below 1% in 2025, raising recession risks. The Eurozone is also expecting modest growth, with the IMF revising it down to 0.8%, and other estimates placing it around 1.3%. China's growth forecasts have also been reduced, with projections now around 4% to 4.5%. On a brighter note, India appears to be a resilient spot, with projected real GDP growth around 6.4%, supported by strong domestic demand and public investment. Unfortunately, Canada is forecast to fall into recession in mid-2025 due to these trade policy impacts. These conditions mean that global trade growth is expected to dip more sharply than overall economic output. The IMF forecasts a mere 1.7% growth in global trade for 2025. This situation is exacerbated by extreme policy uncertainty. The Economic Policy Uncertainty Index reached its highest levels this century in early 2025, prompting companies to pause investments and cut spending. So, how do tariffs impact the economy? They act as a negative supply shock, reallocating resources to less competitive sectors, reducing aggregate productivity, and increasing production prices. In the medium term, they can decrease competition and innovation. Models suggest significant consequences. For example, a universal 10% rise in U.S. tariffs, met with retaliation, could reduce U.S. GDP by 1% and global GDP by roughly 0.5% through 2026. The primary risks in this environment include escalating trade tensions, which could further depress growth, and increased financial market volatility. There's also a growing concern about stagflation, that difficult combination of slow growth and high inflation, in some economies, particularly the U.S. The overall sentiment for mid-2025 is decidedly cautious. The proliferation of tariffs and high policy uncertainty are significant headwinds. While some regions show resilience, major economies are under strain. Navigating this volatile environment successfully will be crucial for businesses and policymakers alike to mitigate negative impacts and foster a return to more stable global economic conditions. This involves building resilience, diversifying supply chains, and adapting to this new era of trade. Thank you for joining Economic Insights.